What's up, guys? Hope everyone is doing well. In this video, I'm going to be going over some updates for the total crypto market. Chart 1 is a preface for Bitcoin, Ethereum, and Cardano. Then I will go into the total crypto market. Chart 3 is a preface for the altcoins that I will be going over on chart XYO, JASMY, and Dogecoin. And then lastly, I will touch on SPX and gold. But before I get into the technical analysis, I want to just quickly show this image I saw on Twitter the other day about how fast assets reached $1 trillion market cap. We see Microsoft 44 years, Apple 42 years, Amazon 24 years, Google 21 years, and then Bitcoin reached the valuation of $1 trillion in 12 years, faster than all four of those major companies did. So just another reason to see why Bitcoin is a fantastic investment and presents a use case in form of blockchain solutions and a universal global store of value that should not be scoffed at or taken lightly. Secondly, this right here, I posted this image right here down at the bottom pertaining to the fact that it says right here, the Bitcoin ETFs are already valued at overall in total 37 billion and the gold 93 billion. But up here, this guy says, Daniel Batten, gold ETFs took 7,030 days to reach $93 billion. Bitcoin ETFs took 25 days to reach $37 billion. Subtracting Grayscale, Bitcoin ETFs are 13.3 billion. So Bitcoin ETFs are growing at approximately 40 times the rate of gold ETFs. He then says that's probably nothing, like as I said earlier, you may as well, not take Bitcoin and what it presents lightly and scoff at it due to the fact that, as he just got done saying, 7,000 days it took gold to reach 93 billion, and 25 days the valuation of the Bitcoin ETFs, including Grayscale, are already approximately 1/3 of that. So imagine, in the same amount of time, 7,000 days, how much more valuable the Bitcoin ETFs will be compared to the gold ETFs. And I went over in the last video the fact that there's been a lot of outflows of gold recently and investment means pertaining to gold in general. And I just touched on a number of things, but if you were interested in listening to that, then I would go back to that video. But to go ahead and jump into the total crypto market chart 1, really not too much I'm going to update here. It's still the same chart that I've been going over. We can see these horizontal lines. Once Bitcoin, or not Bitcoin, the total value of the crypto market broke it right here back in August of 2020. Retested it, bull market really then parabolically began. We'd done the same thing here. November of 2023, we broke it. We haven't retested it. We could still retest it at this point. I'm not personally leaning towards that. It's possible, but I don't think it's the most likely that we'll see that retest. If, let's say, it does do that, and we've already set the local high here for this total crypto chart, then it would be around a approximately 35 to 40% drop if it does retest that, which does fall in line with the 20 to 40% rule that I've gone over for Bitcoin in past videos. Whenever Bitcoin in its past history is in a bull market, it never drops below or more than 40%. At 20 to 40% are bear market, or not bear market, 20 to 40% are bull market retracements and are healthy retracements. When it comes to the indicator down here, so this is the relative volatility index, the RVI, and it looks a little different from how I've gone over it in the past. I realized that I could add some Bollinger Bands to this, and this has been a major indicator within the last week or so that I've been looking at as I readjusted it. It's going to be a main indicator for pretty much all the analysis I'll do for everything I'm going to go over here on out. But what we can see here is, if we zoom in some more recent history and we take a look here at this RVI, we can see breaking this horizontal, testing, and then really parabolic bull market began. You can see the RVI was coming up, and then it just chopped up and down in this area until it finally started to lose this I'll just call it an oversold or over volatile region up here, and it needs to cool down, so it's coming down to the mid region, then drops down to low volatility, pumps back up again for the double top, and then really falls off the deep end with the bearish volatility. So I think we could possibly maybe be seeing something similar here as it broke the, again, the horizontal right here, and now we're likely probably just going to continue to chop within this rough upper range until whenever Bitcoin in the market in general tops out, which at this point, with my most recent updates, I think is going to be somewhere approximately around August, give or take a month. Now that is up to change as time progresses and Bitcoin starts to show more decay factoring in, especially if it sees a like week long or week longer than week long retracement from around 53,000 down, like I said, 20 to 40% at most over the next, like I said, week and definitely longer than that. Again, just to mention it, I think around 16 trillion at highest is where the crypto market in total will go, and then at lowest approximately 10 trillion. We move in here to Bitcoin. We have this 4-hour chart that I've been going over recently, been updating on the community tab. I want to point out this RSI trend right here. We've been seeing this resistance as price was in this ascending broadening wedge. Almost, I mean, I'm not technically calling it this, but it also looks similar to a bullphone pattern, but just it's upwards tilted. But anyways, so I've got some price alerts here. One at exactly 50,000, because that's going to be important, as I've been mentioning recently. If we close below that and then continue to go lower, and then also 53% or 53,000 being the rounding up the most recent local high, which Bitcoin hit on February 20th at $52,880. So 50,000, 53,000 are very important values to watch out for, because that is the periphery of the sideways range, the peripheries of the sideways range that Bitcoin's been in, going all the way back to February 14th. So again, we see this RSI right here. It's been in a downtrend, but the price is going up. So we've been seeing some bearish divergence, but we've also been seeing hidden bullish divergence to compensate and to counteract the bearish divergence, which is why the price, as you can see, has just been going up despite that. Now we can see that the RSI is breaking this. It's come up above it, and we know we could possibly see it come down and retest. Maybe it kind of just sits here on it for a little bit and then finally goes up, or maybe it'll just be a quick one and done retest and continues to go up. Either way, it doesn't really matter what it does. So if we do see something like that, we could possibly see Bitcoin come back up into this pattern here and push up to this ascending resistance at approximately 65,000. It really depends upon when it happens. Like, if it happens really quickly, within the next for 12 to 24 hours, it would be more around 63,000. But really, we're looking at around 63 to 65, 66, 67. We'll just say up to 69,000, given that roughly 64,000 to 69,000 would be the double top to Bitcoin set and the most recent in the prior bull market. Now, I was mentioning how this is similar to what we see right here on the daily. On a higher time frame, we're seeing the same structure right here. This ascending, broadening wedge, or upwards tilted megaphone, like I mentioned. But again, I'm not saying that's what it is, because I don't think that's what it is technically. But we see this price continue just to chop up in here. Then we see this fake out. We built back up, Bitcoin did, and then it finally broke back into the structure. So I think we could maybe we're seeing some fractality here from the 4-hour here to the daily. Maybe what we're seeing here is maybe the same thing. We're moving along in it. We're coming down this fake out. Maybe we're going to break back up into it over the next week or so, over the next month. Although, let's say we do go down, like I said, 20 to 40%. 20% will put Bitcoin at approximately 42,000. And 40% will put Bitcoin at approximately 32,000, which again, I've been entertaining these for quite some time, going back to this daily chart. Again, let's see here, just do the same thing. So 20%, like I said, is going to take us right here down to this area, around 42,000. You can see there would be clear reason right here to find support in this sideways range that Bitcoin was in from the 6th of December to the 6th of February. If it loses that and goes down 40%, like I said, that's going to be putting us right around this red bubble, this red ellipse I've had on here for quite some time at this point, approximately 32,000. Also would line up with the EMA band that I have here of the 600, 800, and 1,000 estimated moving averages. And a zoom out, clearly if Bitcoin were to take the worst case scenario, but still bullish, so 40% and come down like this, you know, over the next, you know, February, rest of February, March, and April, when the halving would happen, you know, there's clear reason to find support at just approximately 30 to 32,000. You know, this could also be used to support the case of a pre-halving drawdown. Like, for example, if we go to this monthly chart right here, these yellow vertical lines are representing the halving. So we had the halving of May 2020. See, right before this, we had this March crash. If we go to the halving 2016, it was, I don't remember exactly, it was like June or July. It was somewhere, it was roughly right here in this area. Where it also may have been like, you know, somewhere around September or October. But, you know, depending upon where it was somewhere right here. There was this drop right here, but it may have not necessarily been a pre-halving drop. I don't think the pre-halving drop that some people will make a case for a pre-halving drop in the structure of Bitcoin. I definitely, it's possible, but I don't think it's necessary by any means. And the fact that the Bitcoin ETFs were approved January 10th, January 11th, roughly of beginning of 2024, the fundamental structure and integrity of the progression of Bitcoin's price from here on out is going to be drastically changed because of something as massive as Bitcoin, American Bitcoin ETFs. There's already been Canadian ETFs, but American ETFs, it's a very big thing. There's BlackRock, you know, Fidelity, Vanguard, mainly just BlackRock, and how the fact that they manage approximately like $9-10 trillion of assets globally, and they are insanely powerful when it comes to socioeconomics and, you know, political matters. But anyways, if we look back here at this daily chart, and let's say Bitcoin continues to go up from here, and it's just gonna stay sideways for, you know, however long it wants to, but eventually it's gonna move back up. Depending upon when it happens, again, that's going to, it leads into like halfway into March. Again, we're still going to be hitting around a range of somewhere around 64 to 69,000, testing the prior double top range of the bull market. I do think that the next move will take us up to that range, assuming we don't get some sort of 20% or higher drawdown. Now, I think it's possible that we see Bitcoin, if we look here at this daily chart, we see these little vector control zones, these black boxes spanning out to the right of the price. We can see here that there's 1, 2, 3, 4, 5. So these yellow and these white, these high, well, the white vector candles are high volume candles, and then the yellow ones are increasing volume vector candles, but they're bullish vector candles basically. And like I said, there's 5 of them, and the rule is that approximately at least 50% of them have to be recovered. But it's not absolutely necessary that it does happen, especially in a bull market, and even more especially in the current context of where Bitcoin and crypto is in general. Like I said, like earlier, with the ETFs being approved and how monumental and massive this is going to be in terms of fundamentally changing the structure of Bitcoin and its progression of price over time. Now, really, all it has to do is come down to approximately 47,000. Might wick down to 46.5 or even 46,000, but just approximately 47,000. Now, as a range, I've just been looking at approximately 45 to 47,000. You know, 45,000 being a major drastic wick. You know, let's say Bitcoin, you know, moves up here a little bit, and then it just quickly tanks down, and it hits, like, it wicks all the way down to right here, somewhere around 45,000. And recovers 4 rather than about 3 vector candles. It would also roughly line up with, you know, this estimated 50 EMA band, you know, where we'll see the price kind of come down and roughly respect this, and then likely continue to move up over time. And then again, so for this monthly chart, I already went over a little bit, but the one thing I do want to update is I went over this more in detail in the last video. But again, so I changed the RVI. The MACD still looks great here, so I'm just going to show this RVI a little bit more. Now we can see here that the RVI, the main line to look out for, the purple, you can see how it's back here in the prior bull market, and, you know, broken out of the Bollinger Bands entirely, broken out above the median of the Bollinger Bands, the green line, And I think we're seeing something similar here. I think we're roughly just going to continue to see it go up on this higher monthly time frame, and then likely maybe, given the decay factoring of Bitcoin over time, I still think and I believe that the lengthening of cycles and the fact that the bull markets are becoming less bullish and the fact that the bear markets are becoming less bearish over time, they're extending in length, but their percent drawdowns or draw ups are decreasing. So we might see a little bit more choppiness, than we did back here. It was just a, one peak, drop, second peak, double top, and then it wasn't really that choppy. Now we might, again, see more choppiness due to the decay. So to move into here, Ethereum, again, we have this ascending triangle that I was pointing out in the last time I went over this. We've already come out and retested it, solidly 2 times, but overall 3 times, the main one being this one right here, culminating within the 4-day range around the 25th of January, retesting approximately 2200, and then so far seeing a bounce that is approximately 40%. Now the breakout target of this is going to be this green range right here, so from approximately $3,600 to approximately $4,500, it will draw this out. Basically just take it, as you can see, up to the prior all-time highs, to the double top, similar to what I was mentioning about Bitcoin on its next move up to its double top in the prior bull market. So we're seeing, I think, here some confluence, which I would say further strengthens my personal bullish bias, but again, I could be wrong, and we could see a 20 to 40% drawdown, or maybe we see something more than 40%. It's really, at this point, it's kind of worthless to bring up. But I mean, again, at the end of the day, I don't know. Nobody knows what's going to happen. So I mean, Bitcoin and the crypto market could fall off the edge of the cliff, tomorrow or in the next week or month, especially if something really, really bad, like a black swan event that nobody saw coming, that's really, like, even worse than something like the last black swan event of March of 2020 with the pandemic that affected the globe. Anyways, so that being the target for this ascending triangle, we can see here the RSI is, if I zoom out a little bit here, you can see that the 786 line on this RSI, so this pink line, you can see that it did break it a tad bit right here, but for the most part, it clearly broke it right here. Now we could compare this one right here, so leading into the March crash, to this one. So maybe, like I said, black swan event or whatever else, just for whatever reason, the market drops significantly. Maybe it's a pre-halving drop like I was talking earlier. I don't think that's most likely. So what I think is more likely is that it's more comparable to right here. So August of 2020, again, this goes back to what I was saying for the total crypto market value for all of the crypto market. Similar, I think it's similar to like this. So we could probably see this drop right here was 36, 35, 35 to 37%. If we do see something like that, then that would just basically take us down to see basically a fourth and a final retest of the horizontal, what was resistance, now flips support of the ascending triangle. Stock RSI, I would say relatively is just a similar case with RSI. As long as it doesn't get really dragged down in here, there's nothing to worry about. The MACD looks healthy. Bear market, drawdown right here. We've been coiling around the 0 point, the center point, the median, building up bullish pressure and buying pressure throughout this ascending triangle, and I feel like it's being released at this point. And then if I enlarge the RVI here, again, basically we're seeing something similar to the RSI. You can see back here, February 18th of 2020, first time it broke into this over volatile range, then the March crash ensued. But this was really the onset, despite the crash that we see here, of the prior bull market for Ethereum. Now we're doing basically the same thing as Bitcoin was breaking into the over volatile range around first half of November 2023. You can see this is when the price is building up to what was resistance of the ascending triangle, and then retested it so far 3 times and is showing bullish activity and constructive price action as far as I'm concerned. So as long as it continues to just at least stay above this median line, this yellow line right here, and then more specifically just chop in this upper range throughout the upcoming bull market, then Ethereum should be good to head up to the price target that I've been giving of around 20,000 at lowest, 45,000 at highest. If it pushes 40 to 45,000, then Ethereum, this bull phase, would the market value for Ethereum would likely eclipse the market value for Bitcoin, which a number of people think it can happen. I think it can happen, although I'm not sure if it's going to happen this time around. I mean, I'm open to it. I think it's 50-50. Again, who knows? So here for ADA, Cardano. Something similar we're seeing on the RSI, although this one is more clear-cut and precise. You can see with these green bubbles that I have on here, green circles, the 786, the pink line, RSI breaks it. We have this retracement right here that was 40 or 50, approximately 52%. We did the same thing right here, breaking the 786. So, you know, last time around, like I said, 52%. Although 52% would, oh wait, was it 52? Was it 56? Actually, I straight up just forgot. 50, oh yeah, 52. Okay. So yeah, 52, if it does that same thing again, would take it down to approximately 32 cents. It definitely is possible. I don't think that's most likely. I think, you know, probably a, you know, like 40 to 50 cents would be a more reasonable retest, which would line up with coming down to, I mean, 40 cents sits right at the bottom of this 50 EMA band, and then 47, approximately 47 cents sits at the top of this 50 EMA band, so the purple band. So I'd say that's probably more likely at this point. Stock RSI looks healthy, again, as long as it does not, you know, drop down and stay within this low period for a long period of time like it did back here during, as you can clearly see, the most recent bear market. Again, MACD, basically the same thing as Ethereum, looks good. Had the bear market momentum drop, and then has been building up. Now it's was intertwining with the 50, the 0 point. Now it's broken above, and it looks like it could be crossing here soon and continuing to go higher, although it could cross and do something like this and then continue to come down as well. But if we look here at the look here at the RVI, we can see here that this is similar to Ethereum. We saw this minor, you know, it peaked its head into this over volatile range, and then the March crash happened, and then it continued to go up to this over volatile range. It did have this one big drop, but it still roughly respected the 50 point right here, which, like I said, as long as it's staying, you know, roughly above in this range right here, the price will be constructive and it will be bullish. So we can see Cardano did that here recently. It was more of a it was a stronger move into this over volatile range than it was back here prior to the March crash. Again, I'm still leaning to just, you know, just roughly respecting this range. We won't see a major drawdown here, although that's possible. I mean, like I said, at 52% down around approximately 32 cents, I would say is worst case scenario, or best worst case scenario at this point, which, I mean, zooming in here, if it were to, like I said, draw down at 52%, it would take it down to, so somewhere right around here, which is going to draw importance on this area right here. You can see we had some support, price fell above, came back above, support, double top, and it came down, stayed below it. We had rejection right here, bear market bottom was set right here, and then it broke above, so it could make perfect sense that we see it come down and we test this range if it does something similar to what it did in its past. Now, price target, I think, is going to be somewhere around approximately $22 to $36. And again, I come to this conclusion in all my bull market price projections. I use my phase cycle theory for Bitcoin, and then I basically take the model for Bitcoin and then apply that to altcoins, because altcoins ultimately are moving along and with Bitcoin. If you're not familiar with that, you're new to the content, then past videos, which I'll link as cards, will have me going over that more in depth. Here for the total crypto market chart 3. So this is everything excluding Ethereum and Bitcoin. Unfortunately, it still does factor in Cardano. Ideally, I would want a chart that takes out or excludes Bitcoin, Ethereum, and Cardano, because now I would say ultimately Ethereum and Cardano, are, in quotes, altcoins, but I personally kind of view Bitcoin, Ethereum, and Cardano as like the top three cryptographic solutions or blockchain protocols, and then everything outside of them are, like, I would say, genuine altcoins. Because I mean, Ethereum and Cardano are layer one. So I mean, like ERC20 tokens, like a lot of the altcoins that people invest into are built on top of Ethereum, mostly just Ethereum, and then there's some coins that are built on top of Cardano, which will likely gain more traction in the future as the technology progresses. So basically here, it's essentially the same thing as the total crypto chart one. We see these horizontal lines breaking it, retest as we've seen here recently. Now we're moving back up. We can see here again, have these same bubbles breaking the 786 as I mentioned on prior charts, continuing to move up in the really parabolic portion of the bull market beginning. Again, stock RSI looks healthy, just wants to stay in this upper range and not get entrenched in this lower range like it did basically right here during the bear market. If we look here at the MACD, again, looks healthy, basically the same sentiment I've been saying for all the other MACDs so far. And then here, if we look at the RVI, again, really the same thing. We see this break right here prior to the March crash, and then ultimately we start to see the volatility move out of, like a bearish sentiment into a bullish sentiment, hitting this over volatile range and staying towards the upper half of this 0 point, the yellow dashed line. And then we can see once the bear market or the bull market's dying off right here, a double top sets, and then things flip into bearish mode right here. And then recently from this area, we're starting to build back up, similar to how we did back here in this range, heading into a new bull market. So here for XYO, really not too much to update. It does look good so far from the most recent local low. It's moved up 74%. It's basically back at the local high it set back here around the end of November of last year. Although there is a difference in the fact you can see these candles are closing. We've already had a candle close higher than the highs back here. You can see that this is the 4-day chart. It's actually finally breaking out of this curve linear resistance for the prior bear market. And again, we've already gotten a close above it. The current candle has 17.5 hours left. If I had to guess, it's likely going to close above this. Although if we zoom in here, we are, as you can see, getting a yellow vector candle. So it could be similar to this yellow vector is printed in the highs right here. So this could be indicating that the bullish volume is starting to die off a little bit, especially because there is a white vector. So white vector is going to be a high volume vector, and then yellow is just increasing. So at first it was high, now this is an increasing, which means that the bullish volume is starting to die off a little bit. So again, like it said, it could just be similar to something like this, and maybe we, go sideways for a little bit more, and then we finally move back up. Although, it definitely does not have to happen that way, and it could just continue to move up here, maybe into this vector zone, also mingling with right here this 50 or 200 estimated moving average. Now zooming out here, we can see there's a minor update in terms of time when I think it could top out. Now I think it's possible that this orange range, let's say, with the current sentiment, XYO moving up and a number of other altcoins having some bullish moves recently, maybe we're about to see a massive upswing up to a range of, if I can click it, a range of approximately 2 to roughly 4 cents, somewhere in that range, maybe a penny and a half at lowest, and then maybe sit here for a little bit. We could clearly find, as you can see, if I draw this box out a little bit more, some resistance with respect to right here, this double top and high range at around 4 to 8 cents, and then also this right here in past price history around 2.5 cents to 1.5 cents. So I got to go back to Bitcoin here. This is the most updated way that I think could likely play out the Bitcoin bull market. And XYO topped out later than a lot of altcoins. Some altcoins, like Dogecoin, will, you know, topped out a month after April when Bitcoin hit 64,000. So it was pretty much right along with Bitcoin. Whereas something like XYO topped out more right here in this area from September to November. And in doing the ratios, the time ratios that I've been using according to my phase cycle theory to Bitcoin, it actually puts this second peak somewhere around like February, March of 2025. So factoring that into XYO here, we could actually see, given that XYO seems to lag significantly behind, we could actually see the all-time May happen, you know, like I said, you know, maybe January, February, March of 2025 rather than around like August, September, November, more in line with Bitcoin when it's going to hit its all-time high according to my theory and my projections. All the price targets still remain the same. Nothing's changed on that front. If we look here at the XYO to Bitcoin chart, things are also looking good here. Again, I saw the same price targets. You can see that we have indeed, we're getting a bounce off of this black bear market descending resistance. We're seeing also a high volume vector candle, which is a good thing to be seeing. So far, we're getting a bounce in this ellipse that I mentioned last time around. Now, actually, I need to... All right, so I accidentally hit a hotkey, and I'm going to have to re-record the last 20 minutes of this video because I was literally recording my Discord screen for the last 20 minutes of the video. So I have to splice this in. Anyways, I was bringing up this CoinMarketCap chart to show the fact that, and I've shown this in past videos, but the fact that you see this massive W and it's a horizontal double bottom. Whereas if we go to the XYO to Bitcoin pair here, we can see that this massive double bottom was clearly descending and it was not horizontal like this as the USD pair was. And the reason I'm bringing that up is because you see this red line, this red trend, if I clone that and take it to this the first bottom of this double bottom, which is what's going to line up with, again, the USD pair, they can see that this would be the bull market projection, and it just so happens to line up with the approximately $1.10 to approximately $1.32 range that I think is most likely at this point. I'm basically double, triple, quadruple downing on at lowest 50 cents, but I definitely think $1 to approximately $1.30 at highest is very, very reasonable. And so I just wanted to mention that because I just thought that was very intriguing. I don't know why I didn't make that connection with respect to this horizontal bottom. But anyways, I don't remember if I'd already said it before I'm splicing this in, but seeing this bounce right here on this resistance is great. We're seeing this high volume vector candle, which is great. The RVI right here is building up, so, you know, best case scenario, it, you know, with strength starts to show some strong volatility, and we really break this 50 estimated moving average band, and then move up to the 200 EMA, and further we break that as well. Just to quickly reiterate, it's not in the first 30 minutes this video. We look here, like I was saying, this looks great. We're closing above the bear market curve. I think this orange range, highly likely around 2 to approximately 4 cents, lines up with this area back here that's clearly important. As you can tell, this range right here in past price leading up to the all-time high. Now, we go back to this chart right here, where XYO lagged pretty severely with respect to Bitcoin and topped out more within like September, October 2021 in the last bull market, which according to my most recent updates and factoring in decay, it's going to put the second top somewhere around like February, March of 2025, which means that there is a more likelihood, factoring in my phase cycle theory in application to XYO, that we see the top happen within this ellipse right here. So basically like January, February, March of 2025. But it also could be different and top out around Bitcoin does, which currently I have somewhere around August, give or take a month. So let's see. Again, if we look here on this XYO USD, massive move of the volatility recently. I think it's likely to carry out. Stock RSI again could be crossing as well. So hopefully I covered everything that I may have not, and if I recovered something, my apologies, but I didn't realize I hit my hotkey. So moving in here to JASMY, we can see here that it's had a very large move recently from the recent local low to the current local top. 317% move from 25th of January to basically, it's been about a month and it went up 317%. You see that it's had this high volatile move on the RVI, and it's up towards this upper portion, so it could, continue to chop up here and, continue just to blow up and go even higher. There's also definitely room for a retracement, down to at lowest, I would say, approximately half a penny, so like around 0.0055 to 0.0065. But again, I think it's 50-50. I think it's definitely a possibility that it just continues to blow up here. It's also a possibility that it goes sideways and then continues to go up, or it has more of a drastic drawdown and then continues to go up. But I do think this is a promising project, and I do think it will perform well. But it does not have enough data anywhere that I can find to project, to give some sort of potential projection, according to my theory, as to where JASMY is going to go into a next all-time high. So if we look here at Dogecoin, it's been quite some time since I went over this, but the first thing I want to bring up are these time tools. So we see this bear market right here, from this local top to leading into the parabolic move, 161 bars. Do the same thing here at this high and to the right at the brink of the parabolic move. So the most recent bull market for Dogecoin, 148 bars. So we're basically seeing, 150, 160 bars. Bull market is over, accumulation periods over, and the parabolic nature of the bull market's about to begin. So around 1,000 to 1,200 days. And zooming in here, we can see that we've met the criteria already so far. We see 148 bars. I haven't met it just yet. We're basically 2 weeks away from it. 161 bars will take it out a little bit further, but I would say still essentially we're basically at the point of seeing a bull market ensue, especially with the fact that Bitcoin looks good, Ethereum looks good, Cardano looks good, the ETFs having soon. I mean, there's really no good reason at this point to be bearish on any cryptographic solution or protocol that has a viable nature and backing behind it. So when it comes to these Fibonacci tools, we can see here these prior to bull markets, we can see right here when the price closes above the 0.5 and then even more so the 0.618, the bull market is already on its way. We can go to this one right here. We see the same thing, 0.5, 0.618, bull market is already on its way. For our current time, that's going to line up with Dogecoin closing at or above 19 cents, and then even more so at the 618 at approximately 26 cents. So when you start to see Dogecoin close above 19 and up to 26 cents, this is historical confirmation that the bull market has basically, the first impulse of the bull market has happened and the rest of it's about to ensue. Now when it comes to the all-time high, you can see this one right here, hit the 0.5 or the 1.5 to the 1.618. That would line up with $2.90 up to $3.95. So basically approximately $3 to $4. Although this most recent bull market, which is this one right here, would be more likely according to my phase cycle theory and my projections and ideas. Although again, I could be wrong. I don't know what's going to happen at the end of the day. But this bull market took it up to the 2.186 to the 2.382 range, which lines up with at lowest $18 up to at highest $32. Now, if Dogecoin goes to $32, Dogecoin follows Bitcoin relatively close. Dogecoin topped out like 2 weeks after Bitcoin did in 2021. Bitcoin topping out in April. Dogecoin topped out in the first 3 days, first week of May. So roughly 2 weeks, 3 weeks, 4 weeks at most, a month after Bitcoin topped out. So it's going to top out, as far as I'm concerned, relatively at the same time, which means that Bitcoin's likely going to be above 200,000 according to my ideas and projections, maybe even as high as 220 to 230,000, with that sweet spot being around 225,000, 227,000, as I mentioned in last and past videos. So I don't really think $32 is likely. I mean, maybe it's definitely possible, obviously, but if it does that when Bitcoin's below $200,000, then the market value for Dogecoin will be higher than Bitcoin. But if Dogecoin hits $32 when Bitcoin is 210 plus, especially 220 to 230,000, then it will be roughly $1 trillion less. Or not, no, my bad. It won't be, it'll be roughly the same, which again is still, it doesn't really seem too feasible or possible. So at this point, I'm leaning to basically $20 to $25 at highest. And if it does do that when Bitcoin's at around like $220,000 or so, then it will be roughly $1 trillion less than Bitcoin in its valuation. Bitcoin will be around 4 trillion to 4.5 trillion when it's around $220,000, give or take like $5,000. And Dogecoin would be somewhere around 3 to 3.5 trillion dollars when it's somewhere around 18, 20, 22, 23, 24, $25. So I mean, at the end of the day, I think it's 50-50. Either $3 to $4 is going to be met, or $20 to $25 is going to be met. If we look here at the RVI, we can see that it's been building up recently, factoring in these time tools, and where Bitcoin sits, Ethereum as well, Cardano, the other, the big three, as I mentioned earlier, looking very bullish. Again, the ETFs, the halving is 50 to 60 days away from now. I don't see any reason why this is basically just not going to continue to rise here, and we're going to enter the bull market, as I've been saying this entire time. Now, if we look back in past history, we can see that, well, actually, I disregard that thought. So at this point, I don't think that if it does drop down, it won't go any lower than about like, the approximately 7 cents that it's already wicked to. Maybe it wicks down to around, 7 cents to 6.5 in a really quick wick, especially if Bitcoin goes down over the next, few weeks to a month or two, as I was talking about earlier. But, overall, I don't think, clearly, I don't think Dogecoin is going to set a new low. I mean, although that definitely could happen. But to move into the SPX here, so right now we're on the weekly, if I move to this daily chart, we can see here that, again, I've been emphasizing this bearish divergence we're seeing here on the chart for SPX. You can see bearish divergence clearly right here. The stock RSI is showing the same thing. MACD is showing the same thing. The RVI isn't showing the same thing in the long term, although if we zoom in here, we can see that more short term right here, we could be setting a double top right here as the RVI, the volatility is dying out. We might go up a little bit more, but ultimately start to die out here and then enter the stock market crash that I've been talking about for, roughly a year and a half at this point. As I said in the last video or the last few videos, I wasn't necessarily expecting this much of a, a move, above right here when we had this drawdown right here. But at this point, it does seem like we are setting, likely, I think, again, I could be wrong, a double top right here. The weekly is also showing, RVI has an exaggerated bearish divergence, nothing on the MACD. The stock RSI could be dying out right here. I mean, if it doesn't go any higher and flips down, then we would see some exaggerated bearish divergence. We're also seeing some exaggerated currently, as long as the RSI doesn't go higher here on the weekly as well. Let's see, where is it there? If I take it to the monthly, again, we can see that, I mean, we're in a really long-term bearish divergence right here on the weekly. I mean, if we look at right here, we can see that this top right here, RSI is pretty drastically below this area right here, but yet the price is higher. And this is the weekly or the monthly, so this is going to have a lot more validity and strength in terms of technical analysis associated with it. The stock RSI is also basically showing the same thing. We could likely be getting stuck here in this lower portion as it enters a major crash. or at least just a bear market. MACD is essentially the same thing, and also essentially the same thing right here on the RVI as well. I mean, really even going all the way back to December 2017, January of 2018, price is going up, but the RVI is slowly seeming the volatility of, you know, bullishness is dying off. We move in here to gold. Now, it hasn't really changed that much. It's still just sitting in this horizontal resistance of approximately 3 years. It's about 6 months away from being 4-year horizontal resistance. Again, still have my bearish bias for gold, just as I do with the stock market indices. So I mean, we could see something like this, you know, maybe it draws down and hits this ascending support and it continues to go higher and I'm wrong. Or maybe we see something like this and it comes down and loses that and continues in, you know, maybe it goes in this, you know, sideways right here, and maybe the price is just going to continue sideways for the longer period of time. But I mean, like, so we're getting a bearish divergence on the RVI from right here. We're seeing this price is kind of like, you know, like it's rounding out. It's kind of tapering off, but it's still going up. RVI is going down. MACD is going down as well. Stock RSI is going down as well, and the RSI is going down as well. So I just don't really see too much reason to find that gold's going to have a major uptake in bullish volatility. And then also, like I mentioned in, I think it was the last video, it was in the last 2 or 3 videos, the outflows of gold and its ETFs recently. The information I went over at the very beginning of this video, the fact that the Bitcoin ETFs are already 1/3 of the gold ETFs in 25 days, and it took gold to reach 93 billion in approximately 7,000 days. I mean, that's completely astounding and bewildering, the fact that Bitcoin was able to do something like that in such a short, a third of the value in such a short period, not even a month. But anyways, that wraps up everything I wanted to go over in this video. So again, as always, hopefully enjoyed. Once more, none of this is meant to be financial advice. It is ideally meant to be educational information, as I just talked about, you know, technical analysis, indicators, and things along those lines. But all of that being said and everything gone over, I hope you all have a blessed day.
Ooh, I'm regretting now.